Hi, it's Hillel here, talking to you from my home office, and I'll be discussing the following in this video. What is a Roth conversion? Why consider a Roth conversion now? A provision in the CARES Act that makes a Roth conversion perhaps more attractive, and discussing a calculator, tax calculator, and other resources. And encouraging you to discuss a Roth conversion to determine if it's appropriate with your CPA. So, what is a Roth conversion? A Roth conversion essentially is a distribution from a traditional IRA, a rollover IRA, a SEP IRA, or a simple IRA if it's been held in your account for 2 years or longer. It's a taxable event. Earnings and deductible contributions are taxed at the conversion in the year that it's made. If taxes are paid with funds outside of your IRA, then the full amount of the Roth IRA will grow tax deferred. So, a Roth IRA account holder essentially is not subject to early withdrawal penalties, and there's no required minimum distributions on Roth IRAs. So why now? What makes a Roth IRA more attractive now? Well, as I mentioned, the CARES Act, which stands for the Coronavirus Act, Relief and Economic Security Act, it looks like it's just about to be passed and signed into law. It's $2 trillion relief package. And one provision in that relief package essentially allows a waiver of the early withdrawal penalty, which is a 10% penalty for withdrawing out of your IRA before age 59 and a half. And the amount that may be allowed according to the legislation is up to $100,000 can be withdrawn without a 10% penalty. So that might be something that to look at. The second is market values are down and you're taxed on the value of your account that you're distributing, the amount of the distribution. So it'll be taxed on a lower amount assuming the market recovers and continues to grow. So again, I just want to caution people to, when considering a Roth conversion, it may increase your tax bracket. That's why it's very important to have a CPA or a tax preparer review it with you to make sure that it makes sense. And also, once converted to a Roth IRA, it cannot be reconverted or recharacterized back to an IRA. So if you look at the link in my email at the bottom, you'll see a link to a Roth conversion calculator, and it's pretty straightforward, but I want to just kind of give you a heads up of the data that you'd need to gather, and it's not too difficult to do, but the following is what you would need to gather. It's 3 sections: the IRA itself, the current and future tax rates, as well as the time horizon. So when you're talking about the IRA itself, you need to obviously know the value of all of your non-Roth IRAs and the amount that you want to distribute. The current and future tax rates, so you're going to need to know your tax filing status as well as an estimate of your taxable income. You can obtain that from your last year's Form 1040, your tax return. Also, the federal tax rate, it's an estimate that you'd need to make when the first distribution will be made from the Roth IRA. And another is if you're in a state that if you have state tax, whether to include state tax as a provision in your calculation. And then the third is the time horizon. So it's really the number of years before taking that first distribution and the risk that you're willing to associate with investing, and you'll be able to toggle and take more risk or less risk, and that will have a bearing on whether or not the Roth IRA makes sense. Again, I'll encourage you to, once you do that, to run it by your CPA, tax preparer, to verify that it does make sense for you. So in addition, you'll see below a couple of other links that give you additional resources from the IRS, irs.gov, and whatever I could find currently about the legislation that relates to the Roth conversion possibility. So finally, it's just my wish for you to stay well and healthy, and I'll continue to reach out to you with ideas that you can use. And until the next time, stay well.